share your goals with, even your results, whether they're good or bad. The thing about that is it should help you stay on track a little bit more, a little bit better, rather than sometimes when it's just you and your thoughts and you and your emotions, you'll tend to blow up a little more often, fall off your rules, just allow yourself, like, you'll get in your head a little bit too much sometimes. So I feel like having an accountability partner, if you guys haven't already taken advantage of it, please try and find someone. Um, but yeah, use them as someone, like, you can even if you send them your results every single day or every single week. If you followed your plan Monday, Tuesday, Wednesday, Thursday, Friday, if you didn't, like, being able to open up to people, I feel like will also help you stay more accountable. Um, but yeah, we'll talk about some more psychology stuff near the end of the call. But overall, how was your guys' week? Nuno, you said not great for me. I just had a reflection yesterday. We'll make my bad point my strongest one. So a lot of work for 2025. Okay. So you got some goals for yourself. I feel like Nuno, you do, just from my experience, I'm not trying to put you on the spot. You mark up your charts well. You have a good eye for the charts. I feel like right now what you need to be working on a lot is your psychology. Which is a lot of people's problems, to be honest with you, but we'll touch more on that on the end. But yeah, for everybody else in here, talk to me. How was the week? How are you guys feeling? Did you guys stay on your plan? Did you guys follow your rules? What was difficult? What was good? What was good? What was bad? Not good for me too. Did a lot of review on my journal. Recognize a mistake of yours. Okay, that's important. I know we spoke about it in private pre, but that's good. Weren't too bad since I was genuinely wasn't expecting much. That's good. That's okay. Myself, as you guys know, I took that Euro, GJ, and Euro this week, Monday, Wednesday, and Friday. Okay, I'm going to be honest with you. The profits from Monday were good enough for the whole week. If anything, I could have maybe chilled on Wednesday a bit. I didn't really need to be taking a trade on pre FOMC, but I also told myself it wasn't a US pair, and also I told myself that I would be aggressively managing it because there's FOMC later. So that was my reasoning for Wednesday, and then we'll go through all the trades. But then on Friday, I had my Euro longs as well that we talked about on the live call. Totally, and when I don't have a setup, I kind of force it. Yeah, my psychology is my worst. You know what, Nuno? Maybe a new rule you should make for yourself is until you feel more disciplined is not to be taking any trades unless you're on your setup. And even if you're on your setup twice per week, you can only take trades on those 2 days or those 2 times, whatever it is. But maybe do that until you feel more disciplined. Something maybe you can test out. Also, I say it all the time, guys, but remember, just because you show up every day does not mean you need to be taking a trade every single day. And I need this to get through all of your guys' heads. Just because you show up every day does not mean you need to be taking a trade. Okay? You're progressing even when you're not clicking buy or sell. I promise you. The biggest, the biggest downfall to 80-90% traders is being able to stay level-headed in the shit times. Okay? In between your good trades, staying level-headed in between your good trades, meaning your L's, right? If you can't stay level-headed in between your L's, or sorry, in between your W's. So let's say you take win, loss, but those 2 losses aren't risk managed. You blew up on your second one. Then what's the point, right? The numbers game won't work anymore. It won't work. The RR system won't work. Nothing will work, right? So remember, you have to be able to take L's to the chin. Okay, become a good loser. Literally, become a good loser. Remind yourself every single day. You take a loss on the chart, right away in your head, you should be thinking, this is completely normal. I know what I'm doing. If as soon as you feel emotion creeping in, like, oh, I gotta try that trade again, or I gotta take a step away, shut the screen off, whatever it does, whatever it takes. Okay. There was someone I know personally who's doing pretty well now. I told him to stick true to these rules for 3 months. Okay. 1 trade per day. And again, that doesn't mean you have to show up and you can take 1 trade per day. Ideally, 1 to 3 per week. But I'm saying, even if you want to take a trade every single day, you're only allowed 1. Win or loss, after that 1 trade's done, you shut your screen off. Okay. And now I'm not saying for the rest of your life you're going to be taking one trade per day, but what this will do is if you practice this for, let's just say, 3 months, you will naturally build more discipline for yourself. You will naturally feel like, okay, I don't have to be in the market. I don't have to be taking trades. It'll benefit you long term. Okay. And the thing is, too, you'll actually progress quicker taking less trades. And it's so hard to wrap your mind around that sometimes, because sometimes when you're not taking trades, you'll naturally feel like, oh my God, like I'm going nowhere, right? Like my P&L, my balance is still the same, but you're progressing mentally. And don't forget the biggest part of trading, the most difficult part of trading is the psychology side of things. So don't forget that. The biggest problem we have is we're so focused on making money that we end up not making money. Literally, it's so, so true. Guys, the most money I make in trading is when I just focus on the quality of my trading, technicals wise and also psychology wise. Okay. That's when you'll see the most progress. That's when you'll see the most profits, is when you're just focusing on the quality of your trading. Okay. A to Z, meaning you're following your system, you're following your plan, you're following your rules. Okay. That's when you'll do the best. Okay. Don't enter a trade and just be like, okay, if this goes my way, I'm gonna make $1,500, or if this goes my way, I'm gonna make $3,000. Don't think like that. Enter the trade and be like, okay, this is where I'm targeting. This is where I'm gonna invalidate my trade. I have all these targets. This is where I'm gonna ideally want to manage it. And if it goes against me, who cares? There's always gonna be a next day. Okay. There's always a next day, and remind yourself of that. All right, a little bit of a rant to start. Building good habits is what we need to focus on. That's it, man. I'm telling you guys. And for the people that have that lack of discipline, I know this is hard to swallow, but you will see the most progress in your training if you're just taking one trade per day. Okay. Maybe I'm not saying you have to follow that, but maybe if you want to use two, but I'm telling you, one will even be better than two. Focus on one trade setup per day. You can only take and make sure you have a risk setting all laid out. Maybe, I don't know, 1%, 1.5%, maybe if you're doing challenges. But you follow that every single day, guys. The problem a lot of people do as well is you follow your plan for 3 days, but on the fourth day, you blow up. Okay. Then the fifth day comes, and let's say the fifth day would have been, there was perfect trades opportunities, but the fourth day you blew up. So now nothing works no more. The numbers game is out the window. The best traders I've met, the best traders I've spoken to are the ones that can take an L to the chin and go on with their day. Because that's friggin' trading, man. There's no way to only take wins. Okay, if there was, I'd be a friggin' trillionaire. I'd be wiring you guys all millions of dollars right now. Okay, but it's not. I'm not trying to toot my own horn too, but I don't know a lot of people that can mark up a chart better than me. And I'm not just saying this. I've spent a lot of time staring at charts and studying price, but I'm also not a millionaire. So what does that tell you? I need to work on my psychology side of things too. I'm not perfect mentally. So that's some of my goals as well for the future. My biggest problem personally is my risk tolerance. I'm not comfortable risking so much money per trade. I am progressing slowly, but it's slow notches I'm knocking off. And eventually I'll get to that point where risking 2-3K per trade is nothing. Right? I'll feel numb. Like I'll feel like, okay, I don't give a shit. But as of right now, I know that if I enter a trade and I'm risking 2K, emotions are heightened for me. Okay. Like I'm a little more, I can feel those nerves kicking in more than it should. Rather than if I'm risking $500, $750 per trade, I have more of that I don't care feeling. Okay. And I've used this analogy before, but think of it in that way of going to the gym, right? You go to the gym, you don't right away pick up the heaviest dumbbells, right? You got to work up to these weights. Okay. And it's a perfect analogy going back to trading. Okay. You can't immediately go to the big numbers. Some people can progress quicker than others, which is natural. We're all different. But yeah, that's why you want to identify your strengths, identify your weaknesses. Okay. And progress accordingly. Okay. Cool. But that's just a couple things, a little rant. Up into some charts. You guys can see my screen all right? Let me get the chat open. All right, cool. Okay, so yeah, like I said at the beginning of the webinar, we always focus so much on oh, by the way, I couldn't upload the live call yesterday. I don't know what it is with WAP, but they love changing the platform every week. And now I can't freaking find a way to upload new videos. So I gotta contact support and figure out ways to upload new videos to WAP. So bear with me. These guys love changing their platform for some reason. I don't know what it is. Oh, also, actually, we'll talk about this at the very end. But yeah, that's as for people if they're wondering why I haven't uploaded the live call yet. It's because I don't know how. Thanks, WAP. Cool. Let's hop into some charts. So we talked about gold yesterday on the live call. Interesting spot we're in right now. So we'll take a look at the weekly candle. What we looked. Yeah, look at this. So interesting spot. So the previous week, okay, this is this week. Okay, so the previous week came up, spiked the high. All right, look how we opened here. Okay, printed a low and then spiked all the way up, printing that high of the week. Bro, can we go over how to recognize the price sentiment? Like when to adapt. When to adapt to the higher time frame direction. I don't really know what that means. Let me think about that. So last week, spike up, cleared liquidity above the highs. All right, even filled, if you look at my crosshair ever so slightly, we filled that imbalance up there too, tapping this high up here. And then big rejection back down. Okay, like big rejection back down. If you look from high back to the close, we're looking at almost 800 pips. Okay, and then this week, if you just study this weekly candle, we literally just, look at my brush. We opened up, printed a high of the week, and then sold off. Okay, that's what this weekly candle looks like. It's very ugly with this drawing, but open of the candle, came up, printed that high of the week, and then continued selling off right to where we were building liquidity. Okay, so if you look at from a weekly perspective, look how we grabbed weekly high, right to weekly low. Okay, again, we always talk about it, but you want to be opening up the lower time frames to be pairing this with liquidity, and it makes complete sense why we spiked. Where's my paintbrush? Why we spiked weekly high and why we came to weekly low. I mean, look at this. Simple stuff. We talked about it after spiking this high. All right. Thursday opened up, spiked Wednesday's high. Unfortunately, there wasn't many entries on the way down. What's frustrating? Yeah, exactly. Sometimes it is what it is. And I'm going to touch on that, Neem, but I think is going to be the reason why that happened. But you can see Thursday, December 12th came up, opened up, spiked Wednesday, and just sell off. Okay. Big bearish closure, another bearish closure. And then look how for 2 days, Monday and Tuesday, we struggled to continue selling. Why? Because buyers were being induced in this whole area. Okay. And then just sell. Difficult to really find an entry. Look how we were just leaving daily highs, daily high, daily high, daily high, and just big sell off. So it is what it is. Sometimes that happens. And I believe the reason being, exactly. The reason being is because we've now left a bunch of liquidity here, meaning I believe we should run back to these highs. One second, my dog's going crazy. Yeah, go. But that's my reasoning behind this. I believe we will run back up to these highs, and that's why we left liquidity. Like, look how we've now built liquidity on the way down. All right. As we know, the price tends to move in this same cycle over and over and over. I keep losing my brush. We have build up, okay, trap move, and now we should see price return back up. Okay, was frustrating to find an entry to sell. Respected structure quite a few times. So a lot of liquidity above now. Yeah, exactly. Imagine it runs back to the highs without giving entry. It shouldn't. As we know, the pro moves. What it's going to do is it's going to induce sellers on the way up. Meaning, let's just say, for example, this is a POI of some sort. We come up, we come down, whatever it is, and we trap the sellers. Why does this happen? Because this is a POI we're trading in, right? And then retail sees this as a BOS. This occurs all the time. And I'll show you an example on Euro. And then this is going to be a trap. Let's say we have a buildup of liquidity here, okay? And then a random push up, and then spike down, boom. As we know, we'll be taking this buy. Why? Because sellers have been induced here, and we have lots of liquidity to target higher. Okay, there will be entry. If we do go bullish, don't even worry. Don't feel that FOMO. There will be entries on the way up. I can promise you. Yes, Nuno, that's a good eye as well. As for entries, so talked about on our live call yesterday why I wasn't interested in buying gold. Okay, and why I was okay with buying euro. Okay, price, simple stuff here. We've taken out this internal point, which caused this sell-off, and then we respected lows move away. I don't like taking these trades, okay, as we respect lows. Why? Because we're just building liquidity. Okay, look at this. Buyers think this thing's going to run forever now. So I'm simply just going to wait for another setup to occur. It doesn't mean that we're going to run all the way back down to these lows, but this just means that this is not going to be a setup I'm interested in taking. Okay, like I just drew out for you guys, if something like that occurs, that's an entry I could take. Sure, no problem. Okay, because we've just taken out higher time frame liquidity below, but don't marry yourself to the fact that we need to take out these lows in order for us to go higher. Okay, it doesn't need to happen. Nothing needs to happen. Okay, follow price accordingly. Okay, as of right now, simply just have to wait for some sort of set to occur. Okay, we just had a pretty big move on Friday, to be fair. Moving 300 pips to the upside, actually, even from the low. Almost 450 pips to the upside. We're now starting to tap into these areas from the left. So we'll wait and see what gold has in store for us. Again, as for sells, something we could have had an eye on was this. So if I zoom out quick, we have been trading. So this was on the whole, honestly, the whole early side of the week, Monday, Tuesday, Wednesday. Yeah, Monday, Tuesday, and Wednesday was this price action right here. Okay, and why did we trade like this? Why did we struggle like this to go down? Simple stuff. We have taken out the high up here. So these are just going to be areas that retail is going to be looking to buy from. Okay, however they want to be buying. These are all going to be traps. Okay, as we know. And that's why price has been reacting off it. Every single time they get a reaction here, this is going to be buys for them. Okay, look, if I mark it up like this, let's get out our box tool. Okay, this is an area with a massive imbalance in it. Okay, let's zoom in. Look at the imbalance that price left here. Okay, also a form of a liquidity block. Okay, which is why the reaction occurred. But retail sees this as a POI. Okay, obviously with the BOS to the upside, this is going to be an area they want to buy from. So with that knowledge and that understanding, look what we get here. Okay, price comes up and perfect. They see this, that we took out this high here. What does this now look like? This is a BOS to them. Top. Okay, there's a BOS for retail, which means what? They want to see price return back to these regions here, imbalance here, and go long. Okay, imbalance down here, and they want to see price go long. So look what happens. We get a reaction from this candle here. Okay, price taps into it. Look what we have at the high. Price taps into this area over here. Retail understands this is, sorry, we understand that retail is going to be buying from here. Again, BOS to upside, they're going to be buying here again. Okay, price comes down. Look how it just even gives a false reaction back up, continues selling. Understand that this is just, every reaction is just false. And price gives us an entry. If I just go on the 5 minute here, we get, first entry could have been as soon as this high is taken out, understanding, okay, sellers have been entrapped and buyers induced when this high is taken, okay? And you have that liquidity block above to support your entry. Boom. If you did not want to take this, Okay, we have another confirmation for you right here. Okay, we trade lower, take out lows, induce sellers, which tells me this is going to be trap. And then we get a false reaction here, trade lower to what? Build liquidity here, and then trap move up above the high. What do we have to the left-hand side here? Perfect liquidity block. This is a valid sell right here. Above the liquidity block, you can just open this up a bit because that's a puny stop. And then where did this whole setup come from? Remember, we broke it down right from here. So if you don't even want to hold all the way down to these lows on the left, no problem. Put a line there. This could be your final target. You're 90% out here. Okay, I mean, okay, let's be realistic here. It looks nice and pretty to say it's a 1 to 31, but I don't know anybody that's holding a full volume 1 to 31. So let's talk about where we can partial. Definitely a partial point could be here. Perfect. That is 1 to 10, which is still outrageous. And then obviously look to the left-hand side, guys. Massive buildup of liquidity here as well. You could be targeting this. Okay, these are all areas you want to be paying yourself. Because I'm not saying that we have to run for these lows, but according to our system and according to our plan, this is the kind of lows that we want to be targeting. Okay, so you partial obviously accordingly, understanding where we need to be partialing. Okay, this low, and then you have this low as well. Okay, this is how we could have gotten involved on gold on Wednesday. All right. Also, FOMC. So let's be realistic. I'm not going to sit here and say this is the best trade to take. Why? Because I tell you guys all the time, it's not actually, you know what? Thinking about it, it's not that bad to take. Reason being, this is pre-New York, so it's in London. Okay. And the FOMC is late New York. So it's not like we have a news event coming in 2 hours, right? At 8:30 a.m. News event's going to be coming in 4, 6, 8 hours away. But yeah, this was definitely a viable entry. Any questions about this? No questions. There was a short entry on Tuesday too in London sesh. I don't believe. Let's take a look though. Oh yes, there was clean one. Good stuff. Okay, let's zoom out. Use the replay tool a little bit here. Pam, I gotta run. No worries. We'll talk. Did you fix your laptop, by the way? What happened with Apple? Because I know you went to Apple yesterday with that smashed laptop screen. No, they don't have it in stock yet. Oh, that's so shit. Damn. Okay, brother, we'll talk soon. Take it easy. Cool, guys. So, as we know, these areas are all going to be traps. Let's even use the 1 hour here. Look at this whole area. So, price respects it, moves away. What's the point of it? It's just building liquidity. Okay. So we can mark that as a point of reference that we're going to be building liquidity below this low. And look how long we struggle there too. So Sunday opens up. This is the weekly open. We open up, print this low. Ever since then, we just look how every single time we come back down, respect the low, move away, come back down, respect the low, move away. You guys can probably see the entry. Actually, is very clean. I didn't see this before pre, so it's good eye. So come down, low, high, low. Okay, run the previous low. So inducing sellers. And then we take out, from this low, we run higher and take out this high. Price comes back down, kind of respecting structure, okay? And then trading higher. We're now starting to build liquidity like this, okay? Keep an eye on that. And then we trade higher again. Okay, just continuously taking out highs, trading higher again, taking out a high, return back, taking out a high, returning back, and then price takes out this low, okay? Respecting this one as well. So just building more and more liquidity, okay? Like just simply grab a line. You can see every single time we respect this, imbalance, this order block, whatever you want to call it, there's a rejection, okay? Once here, and then we move higher, okay? Over here again, and we move higher. So let's continue following the story. We respect the low, move away. Where do we move to? We take out previous high, inducing buyers. Then price comes back down. Build up a liquidity. Why do I say this is a build up a liquidity? Simply just respecting structure. This is all price is doing. Okay, building liquidity in the market for us. We want to see that. Okay, because after we see this and we see it get taken out, it either creates a liquidity block. Who the hell is this? I'm just getting text messages from a random number. I don't have to say. We can either take an entry once that build up's taken out if there's a liquidity block, or we'll have to look for some sort of confirmation. So in this example, we can even just use the M15 here. Okay, we don't even need to go and over refine it. We see we have a buildup of liquidity here. We trade lower, induce sellers. Again, still respecting this low from the left-hand side. So let's mark this out. Okay, and then randomly, look how randomly we just get a bullish push up. It doesn't make any sense logically from a liquidity perspective. Okay, where do we run to? We run right to the high that we are building liquidity at structurally. Coincidence, we have a liquidity block right above. Okay, and we don't even need to go lower because there is absolutely no point. The entry is literally on this time frame for us. You have 1 to 5 to this low, and then 1 to 8 and change to the low to the left-hand side. Okay. By the time we come to this low, guys, this is a structural low in the lower time frames here. Definitely want to be not majority, at least 50% of your position. Okay. And let's see, actually pip wise as well. It's 120 pips. Honestly, Dad, you want to be partially heavy. You can't complain that 1 to 5 is a 1 to 5. This could be good for the week. Okay. But you see what I mean? Why I say we don't even need to go to the lower time frames here. The 15-minute is perfect. Why not just use the 15-minute? Okay. 1 to 3 minimum, check. Okay. We've had a build up. We have a target on the other side of the market. We have a liquidity block we're taking our entry off of. This is perfect. We're also, remember, we're in a bearish market on the higher time frame. So naturally, you have that on your side as well. Okay. Something to jot down. I mentioned to somebody yesterday is stop buying a bearish market and stop selling a bullish market. Okay. Naturally, you're just going to win more trades. Okay. Stop buying a bearish market and stop selling a bullish market. Okay. That's what we talk about counter bias moves. You'll naturally be losing a lot more. Of course it is. Yeah. You have everything you need to check off. You're overall in the higher time frames, we're bearish. Okay. You're in a good trading window. Okay. This is right at London Open. And you have this whole setup we just broke down for you guys. Right? Everything we just checked off. Okay. Any questions about this? 2 good trade setups. Unfortunately for the New York traders, there was no trade on gold. But nonetheless, it is what it is. Sometimes that occurs. Any questions on this? Also, again, like I said, there's no point to go to the lower time frames here. The 15-minute provided a perfect entry. So why do we need to go over refine it? Look how the 15-minute chart literally gave us a 1 to 5 opportunity. Okay. Honestly, we could even open the stop up more. You still get 1 to 4 with great breathing room. All right. No questions? All good? I'm getting some dry throat over here. Good stuff. Cool. But that's it for gold right now. Man, if we can get it run all the way back up, that would be wild. That would be wild. Let's see. It's not out of the question that we won't revisit December's low. Okay, think about it like this. Is it possible that we close up something similar to this on this candle? Maybe we get a spike down, grab the monthly low, and then run higher in January. It's possible. Okay. as we dive into the time frames lower, like the daily and the weekly, it does make sense that's on the cards. It's possible for sure. All right. Cool. That is gold. Let's dive into some euro. Some euro longs that I took yesterday. Cool. So I talked about why I did not want to participate in gold longs. Okay, as we respected the low. Different story here. Look what we've done here. We've traded below the low. Okay, you see how the probability just switches up naturally? As for the story behind this, okay. What has price done? So we talked about it in our live call, but you can see how in Thursday, London, okay, price traded up into this area. This was on that dead day. I told you guys most likely not to be trading. I know some of you guys still traded, but Thursday, London traded up into this area in the 15-minute over here, okay, and then just sluggishly traded away. So if I open this PA up on the 5-minute, look at this buildup of liquidity we've had. Okay. However you want to look at it, there's like an order flow perspective to it, a channel, a trend line, understanding that this kind of price action here, this choppiness just builds liquidity. Okay, induces a bunch of traders into the market. Whether that is like a flag, I don't even know what they call it, but other than that, it's just a buildup of liquidity. Okay, from there we just sell off down to the low again. Look at this, we just build liquidity. Right before we stab the low, look how price induces higher. This wasn't even any trading hours, but we stab higher into what? Coincidence, a liquidity block. Wow. And then trade lower into the low. Okay. Now that we've traded below this low, it makes sense for us to go long. Okay. We have plenty of liquidity targets. We've now induced sellers after stabbing this low. So we have all these, I don't know, my cameras, you guys are looking at my ceiling. Sorry. We have all these confluences for us to go long. All right. So moving into New York session when we were looking at this, where is my box? There it is. Pretty sure we stab into something up here. Okay. This was around almost stock open. So I always talk about 9 o'clock-ish time, 9 o'clock to 10 a.m. We always see that. So like NYSE is 9:30 in the middle point of that hour. We always talk about how we tend to see false moves, trap moves, some sort of run on liquidity. And major confluence to this was we've reacted off this false area to the highs, okay, just inducing sellers. So if people are interested in selling from this area, what do they want to see? They want to see price trade below a low, an old low. Why? Because they see that them pattern traders, people that don't use logic, people that don't use reasoning behind their trades, they're going to see this as a BOS. And again, same thing over and over. Boom. They want to see price trade into this area and they're going to be taking sells. Okay. You can even see, look at this. After trading into this area, we trade below a low again. Why? Because it's just going to induce sellers to trade from this area now. Over and over and over and over. Every single time we trade below a low, it's just a buying opportunity. So let's clear these drawings up. So as we know, we reacted off this false area to the left-hand side. This was at 8:30 a.m. Caused us to sell off. Mark this out again. We have a low that we traded below that buyers were looking to buy above. Okay. Once we've now taken it, it now induces sellers. Okay. Maybe people are looking to buy from this area. Okay. Just get this in your mindset. People are looking to buy from here. They get stopped out. They're like, okay, they're in their mind. They're like, okay, cool. I got stopped out on my buy. No problem. I'm just going to sell now. And then it comes up here for them to sell. And they're just getting trapped everywhere they go. Because they're pattern traders. They're not adding logic to their analysis, reasoning to their analysis, following the liquidity. Okay. We want to see price trade below this low. Perfect. We've now done that. Look at the timing. Okay. This is right in the trap hour. And coincidence, we get a liquidity block right below. All right. Buy entry, however you want to take it. I've talked about this briefly in the past, but again, you can take it as soon as the liquidity is taken. You can take it in this imbalance left-hand side. Everybody's different. Okay, I know a lot of people that like candle closures. So let's just say you get the first bullish closure like this. You take your entry like this. Maybe you still tuck your stop below the low to the left. Some people like tucking it right there, trying to predict that extreme. The thing about taking trades like this is you have to understand you're more prone to taking more L's because price could easily give a rejection and induce lower once more, and then maybe print that extreme and run away. So if you do take trades like this, just understand you're gonna be prone to more L's. So reduce that risk a little bit. But just find what works for you. Some people like waiting for a nice bullish rejection. There's your candle. You can still tuck your stop below the low to the left-hand side and ride the trade up. Okay, you can still sneak a 1 to 3 plus. All right, so everybody's different. Find what you're comfortable doing. If you don't like taking trades as soon as that liquidity is taken, so being right here, if you're not comfortable yet, wait for some sort of rejection, but make sure you're still tucking your stop below that liquidity block. Find what works for you, right? You don't need to have the most pin perfect entry. I'm telling you guys, just really focus on your direction. So I remember I was speaking to you guys in live call and I kept telling you guys, Euro should run higher to these highs. Now I can't just sit there and spoon feed you guys and tell you guys enter right here. Okay, that does nothing for you. And to be honest with you, even if I sat here and told you guys just take every single trade I take, you guys are still going to make mistakes in between. And why is that going to happen? That's the psychology side of trading. Okay, there's still going to be people taking these trades, the trades I take, and mine will be a win, but somehow you guys will make yours become an L. Whether you over risk because you're taking my trades, whether you under risk, whether you mismanage it because it's not your trade. You guys will still make mistakes if you're taking the exact same entries I take. So there's no point for me to even spoon feed you. It does nothing for you long term. Sure, you'll take some W's here and there because you're taking my trades, but it's going to be nothing for you long term. So basically, yesterday I did the hard part for you. I gave you guys my direction. I gave you guys highs that I believe Euro should run to in that session. The rest is on you guys. Just find that entry. Okay, find those runs of liquidity. Find those liquidity blocks. All right. But nonetheless, clean entry. I took it somewhere in this area. I don't even remember exactly the exact entry, but when we traded below this low, I think we rejected a bit. I took it, stop loss again below the liquidity block. I don't need to have the smallest stop loss. I don't have to have the biggest risk to reward. Okay. And that's it. Boom. In and out. And as soon as we stab this high, I am closing positions. So whatever it was, 1 to 4, 1 to 3. But that's it. Okay. But I really wanted to show you guys the difference between taking a trade on Euro and the difference in and taking a trade on gold yesterday. The reason why, again, look at the difference on gold. We've respected that low. So naturally, there's a lower probability kind of situation. I don't really want to be taking trades here. You guys see the difference? Am I talking to a wall? The Euro was a great example of marrying idea and failing entry. I was too focused on the lows. Yeah. One question. I find that hard. I find that hard. Realize this when there's. I find that hard. This when there is liquidity buildup just right below. Can you show on the EU? You're talking about liquidity built up here. This is just look. The market will hunt from liquidity point to liquidity point. Exactly. Yeah. No, you're not wrong. Now this is all liquidity. That's why I'm out of my position. Okay. But the current moment we are sitting in here was price was likely to run for these highs next. Okay. Just following the story of understanding, look how we've got a false reaction at the high. We just traded below this low, induced sellers. So we should be visiting this high next. After we take out this high, sure, look, we've left liquidity here. Okay. Not only that, yes, we stabbed this low down here, but overall, this is like relative equal lows. So we could easily run down to these lows as well. See what I mean? Yeah, that's an inducement low. It could be definitely running for that next. You can sell into that, possibly. Yeah, no, Nuno, that's right. Like same thing with Tien. It's definitely it's a buildup of liquidity for sure. But we need to make sure, look, the story in that current moment, in that session, was where was price going to run to next? Most likely, following the story, following price, following the liquidity, we should have ran to this high next. Okay? Especially, again, retail perspective. but taking longs from here wouldn't be with structure. It's with structure now that we've taken out the highs for sure. Guys, tuck whatever ideas, like any ifs, ands, or buts. Focus on what I just showed you guys. That's the correct way of looking at this whole situation here. Okay. From a liquidity standpoint, again, that's always going to be the priority. We're not pattern traders. Okay, don't forget that. After these highs are taken out, obviously now we would not be taking any longs. Okay, but in this current situation, right here, look, is this trading with structure that I took a long right here? No, hell no. That's not trading with structure. Trading with structure is right above this high. Or sorry, right above this low. Okay. Sellers induced. Okay, building liquidity, engineering liquidity at the highs. Okay, look at the time of day. This whole sell-off here, this fall sell-off happened right at the trap hour. Another great confluence. Trading below an old low. We have a liquidity block right below. You target that seller liquidity right above. And now again, like I just said, sure, it's now possible that we can run lower now. Because look at the trendline liquidity we've now left after taking out the high. Boom.
Marco, even before the taking out the high, isn't that is also a trendline liquidity? I think me and Nuno and some guys here, we all are waiting for this to get taken to take this long. Yeah, but yeah, like what you said.
You have to identify, look, in this current moment right here, we have a low, imbalance right below, and a liquidity block, okay? And a shit ton of liquidity built at the highs. Look at the reaction here. This doesn't make any sense, right? Look how price just reacted off this random area to the left-hand side, okay? With a shit ton of liquidity right above. As we know, this is going to be an area Y that sellers are trading from. We've taken out this low. So any reactions at the highs are just false. And I always say it, false reactions are just going to provide us another opportunity to buy into. Okay. Before there's always that, and that thing, what we always talk about in our course as well is we need to induce higher before going lower. Okay. And again, I'm not going to sit here and say, this setup I took is 100%. Obviously not. Was there a situation where maybe that we could have ran all the way back down to these lows? Sure. But that's why I have all of my confluences to take this trade. Right? I told you guys, trap hour, we had that false sell-off down. We traded below an old low. Perfect. We've engineered liquidity at the high, so I have reasoning to go higher. And I'm following my plan, my system all the time. I have a liquidity block right below. Perfect. That's all I can do. The rest is in the market's hands. Okay. As long as I'm following my system, I'm following my plan, staying on my rules, risk management is in check. That's the most important part. Okay. But that like what I just explained to you guys was the correct way of looking at things. So if you guys need to re-go over this webinar or just study this on your own, that's the correct way of looking at it. Just remember, guys, look, if I just draw this out in a diagram, look at this. Build up a liquidity here. Liquidity left here. Price has now come all the way up, done something like this. Ran liquidity here. We have a liquidity block right below. This was a false reaction of the high. If I can draw that little diagonal, boom, long, up. Okay. Now that we've trapped sellers, taken out their liquidity, left liquidity here, relative equals at the lows, sure, it's possible that we can sell back down. All right. But understand, like in this current situation here, the next destination per se, the next area that we should run to, the most likely area we should run to is these highs here. This false reaction was just to engineer more liquidity at the highs because they're going to see this again as BOS. BOS is another area to sell from. We were trying to predict. Yeah, that's okay. That's what it is. But nonetheless, what I just explained it's the correct way to look at it per our system. Okay, per the strategy. So again, if you didn't understand it, just go back and watch it again, study it. But again, I had all my confluences to take the trade. Okay, we had the timing, trade taken out of liquidity block. We had liquidity target at the highs. All these things stacked up. Why not just take the trade, right? And again, it's not a 100% win rate setup, so I'm not just gonna full port the account because I know it's gonna win. But I've seen this kind of setup occur a bunch of times, so I was comfortable taking this trade. All right. It's 2 times I've gotten a message from a random number. What the hell? Cool. Um, all right. I kind of went on a whole psychology spiel to start the call. What any questions you guys got? Let me know. This is your guys' time. I've covered what I wanted to cover on. Then we had GJ run all the way back to the highs. No, only this on EU. Yeah, EU is good. EU is good. EU is good. I'm gonna start studying some future stuff as well. So I might. I had a. I'm gonna think about it for sure. I might cut my pairs down a little bit, just because I'm gonna be looking at some future stuff and studying some futures, learning about futures, blah blah blah. So I might cut my pairs down to 2 or 3. That's just what I'm gonna do. Do you take entry? Yeah, we talked about that on the live call on GJ on Wednesday. But we spoke about this on the live call. But then after FOMC, the actual move came. Look at this move, guys. 460 pips. What's the difference with futures and FX? Technicals wise, absolutely nothing. But you have to learn about like contracts. Yeah, like the platforms are all different. So, but like technicals don't change. Like my strategy, all the strategy we use every single day is just going to be applied to the futures charts. So nothing changes. It's just a different market. There's some guys in here in the group that already trade futures. But yeah, nothing changes at all. System's still the same. But yeah, it's only going to be traded in New York session 2, obviously. Like there's not futures trades to be taking in London, I believe. Don't quote me on that though. But yeah, guys, I think that's going to be it for me. But yeah, I am going to figure out how to upload these calls now. I'm going to contact WAP support and figure out how to upload these things. Yeah, like these guys keep changing this freaking platform over and over and over. So I don't know. I got to figure out what's going on here. But yeah, guys, that's going to be it for me. Hope you guys have a good weekend. Monday. Okay, so next week it's a crazy week. Obviously, with Christmas and everything like that, bunch of bank holidays. Tuesday, Wednesday, Thursday, bank holidays. Obviously, don't trade. Use it to study, spend time with family. I mean, it's Christmas, so spend time with family for sure. But yeah, Monday and Friday are trading days for sure, but we'll see how they are. Don't expect too much, right? Most likely just I don't know, wrap it up for the year. I don't even think I'll be taking any trades, but I'll still show up Monday and Friday. You never know. You explained good stuff in the seminar, bro. Nice. Yes. I just jotted some ideas down I wanted to talk about. Wanted to cover with you guys because I know some of you guys go through the same issues, the same problems and stuff. Man, trading isn't easy. It's a big test of your psychology, your mental strength, your discipline. I mean, you'll find your personal weaknesses really quickly through trading. Something I definitely recommend for you guys, especially the people that struggle with some discipline, is if you can't find discipline in your personal life, like if you're lazy or maybe your diet's no good, it'll reflect into your trading quite quickly. So something that's As you guys know, I talk about all the time now, but something that's really cleaned up for me is just I go to the gym all the time. I eat well all the time. Um, I'm I'm pretty disciplined now. I've been like that for about a year and a little bit now, so I run all the time. All these things, man, it's a direct correlation to your training, I can promise you. So, I mean, if you lack on your diet, if you slack on staying healthy, getting some exercise in, maybe like I'm not even saying go to the gym every single day, but get 10,000 steps in a day every single day. All these little things, it'll help. It really does, Preet. You're right, for sure. But yeah, that's it for me, guys. I hope you guys have a good weekend. I'll see you guys again before Christmas, so no Merry Christmas yet.